Hello, 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 mic test, mic test, mic test. Hello, guys, and welcome. Before we begin the webinar, let's have a very quick introduction and then we'll proceed as usual. So, my name is Nirav. I'm the admin owner of 50eyes.com website as well as 50eyes Market Analysis YouTube channel. And today we are live with the 400 and 400, not 400, 400 plus trades we have covered. In this edition, we are live with the 175th webinar. This is the weekly webinar series. In the past series, we have discussed live 432 trades which have worked out. And today again, we'll be looking at the microphones. And of course, yes, guys, just let me know if the screen share and the microphone are both fine. You can see the shared screen and hear me perfectly fine. Just let me know in the comment section. I can see confirmation and about the mic test. Let me know about the screen share as well. All right, guys. So what we will do now is proceed with the quick intro here. So as I was mentioning, we have in total covered a total of 432 trades in the past webinars so far, and in this edition, we'll be discussing what happened with these discussions, and of course, we'll be looking at the past chart or the past webinars recording, which I already opened up over here as the 174th webinar, and we will also then look at the live chart after that. The way these webinars generally proceed is first I'll discuss the past chart data, then I'll discuss the live chart with commentary, and then I'll give you a few moments to discuss if you have any doubts, and once all doubts are clear, we'll then move on to the next chart. As for the doubts, we only consider doubts discussed during the live webinar session. So for only those who are live with me in the webinar, we'll be discussing the doubts. And generally we go live at 4:30 p.m. GMT. We are a bit late today, so that's there, but generally that's the time we try to go live at every Friday, except for the last Friday. But in this case, we are not private but public on the last Friday, as we had only 2 public webinars this particular month. Anyways, that's about it for the quick intro about the webinars. As far as my past record, you can just check the accuracy of my past webinars, etc. We have kept a track record for 6 years or so. These sheets will take some time to load, and then you can check all the past webinars properly mentioned here, and what happened with the outcomes, etc. here, visiting the link 50r.com/forecast accuracy. Lastly, you can check out my video course and Elliott Wave, as well as the book Think with the Markets, which is available on Amazon's Kindle for electronic delivery instantly. And lastly, those of you interested in getting these updates regularly can request details for the Slack private group via my website. Here's the link 50r.com/contact us. Select the subject matter as requesting details for Slack private group. And that's about it for the quick intro. Let's now head over to the charts. First, let's have a look at what was being discussed about the chart of Euro USD in the last webinar, and then we will move on to the current live chart. So on screen we do have the discussion from last webinar. Again, guys, just let me know if the audio clarity is hearable. If there is any disturbance, just let me know. On my end, I have checked, it looks fine. And the confirmations also seem microphone is okay and screen is okay. Okay. So yes, as I was saying in the last webinar, we were discussing the chart of euro, and let's see what was being said. The price at the time of discussion was 1.17534. The idea seems to be that the market is possibly going to give a minor pullback or correction, and then the market is going to head lower. Date of the last discussion was 7 days ago, and the exact date was 19th September. That's about it. Let's now head over to the live chart of euro and see how things have progressed. Here is the live chart on euro, and here is 19th of September. So somewhere here we were doing the discussion. This was the diagonal, I think, and the idea was that the market will give some pullback and then it will fall. The market has given the pullback and then it has given the dive in or the fall. So this analysis has worked out as expected, as it went lower as per analysis. That's it for the quick outlook on euro from the last discussion. Let's now head to the live chart and see the current count. So current count, it looks like I have made some minor updates, as in I'm assuming that this may be the wave 1 or A. Let's just call it A for the sake of simplicity, and this is the wave 2. And here is the assumption that we are currently in an impulsive structure in the downward direction. In Elliott Wave terminologies, we are basically referring to 5 legs lower. This will be the first, second, third, fourth, and this will be the fifth. First is complete here, second is complete here, and here we are in the third leg, 4, and there will be the fifth. This is the expected progression on euro. That's basically suggesting us that more downside can be seen here, and the setup is rather clear here. Instead of discussing any more possibilities, I'll just push out the most obvious setup here, which is suggesting to look out for short trades below 1.16608. So below this level, we are looking for selling opportunities on this counter on Euro USD. And this is the alert for to look for, and the actual conservative setup will be to sell short below this low of 1.16453. But of course, that will be too conservative, and we personally want to just analyze how the market behaves, and if it behaves in a way that we think is suggesting further continuation, then we will look for selling it below 1.16608. So I mean, at this point in time, that's the setup. Just let me know, guys, if you have any doubts or questions on the discussion. Hello, Joe. Hi, Manuel, and thank you for the confirmation about the microphone and screen. Good evening, Raghu. Our private Slack group members, Raghu and Joe. And thank you for the confirmation. If you don't have any doubts, and I don't see any further questions or comments here, so I'll just consider that everybody is clear on the discussion. Let me just check if there is anything to add here. Thank you for the confirmation, Raghu. Well, it is simple and clear setup. So it's just a wait and watch here. If we see the alert triggered, then we'll look for the trade. There is nothing much to add here. So we'll just conclude it over here and move over the next chart of CL, crude oil. So let's just check what was being discussed on the chart of crude oil in the last webinar. Of course, we have the recording of the webinar conducted on 19th of this month, and here we can see the setup is sideways continuation before the fall. We are expecting the market can go up a little bit. The price is 62.9, and the idea is to look for shorts below 62.15, and the market can go a little bit higher and extend the range as well. That's also a possibility as per this discussion. Let's now look at the live chart and see how things have progressed. So here we have it on screen, the live chart of crude oil. The last discussion was on 19th. Somewhere over here. And the idea was that market can extend the range a little bit to the upside, which is exactly what it does seem to be doing here. Let me adjust this though. Anyway, so this is what it does seem to be doing there. It is extending its sideways range in time and a little bit in price as it has taken out this last high, as you can see over here. Market has taken out this high. So range has been extended. You can say maybe there's a false break of the range as well. Whichever term you would like to use. In either case, this analysis has worked out so far. It's a plus one as it has played out the first part of the analysis, which is extending sideways, right? Now comes the second part. Now we are going to look at what this market may be doing now, an update to the counts if required. If not, what is this market even doing here? So at this point in time, I am of the view that this market may be closing on the sideways movement, this box range movement in a bit. For instance, right now, this may be forming a possible diagonal structure. We don't have 100% confirmation as of yet, but maybe it will be giving us a structure of this sort. Let me just quickly arrange it properly here. That's just an assumption, and in that sense, we are saying that maybe this is a wave one of a lower degree, and this is an So here I am assuming that even after this B, this market can head lower but give one more leg up before the fall. So anyways, without confusing you guys too much, here's this outlook that this market is expected to do something of this sort. That's the HTF analysis suggesting that this range, this sideways range in the white box, will again be tested and probably broken to the upside. That's the outlook, although it's not very relevant at this point in time. The only thing that is important at this point in time is the fact that we are possibly going to see a diagonal structure formation over here. And I would like to analyze that in a little bit of depth. For that, we can just zoom in. And from this point of reference, I'll just analyze this chart. Price is around 66.513, and from 2nd September, we are assuming that this is a A. This is heading for a B. And once this B is complete, we will then look for a leg down as a C. And within this B structure, we are looking at, let's say, a dot here, a dot B here, and heading up for a dot C here. And within this dot C, we are looking at a diagonal structure. Hopefully this is clear enough. I'm going into a little bit of detail here, but that's how details are supposed to be. They can be a little bit confusing. Anyways, within this dot C structure, we are expecting a possible diagonal perhaps here. And that diagonal could be so that this is the expected outlook of the diagonal. This is just a rough idea. It could be a little bit different from what we are assuming. But more or less what I'm really saying is that some sideways movement to downside movement followed by more upside or one leg up is remaining here. So a little bit congestion or unclear movement is expected here, and you can already see unclear overlapping movement here. For instance, if we remove all this, then you can see that the market has from this point onward been in a sideways range, extended the range a little bit, right? Then again formed a sideways kind of movement here. Then it has given a break, but it is now going back into the last range. So this is what you call a typical example of a choppy sideways movement, and that's why I'm saying although I'm expecting diagonal, it is a little bit unclear. So it's a wait and watch market. We don't have really clear evidence of what to do or what to specifically label this count as, but overall the idea remains that perhaps some more upside before the fall. And as far as the upside is concerned, we do have a resistance starting from 66.759 to what is this 67.817. So within this range, excuse me. So as I was saying, within this range, we expect this market can stop or take resistance and then move lower. That's about it for the discussion on West Texas Intermediate crude oil and wait and watch market with the defined resistance and expected count and direction already discussed here. Next plan or course of action is to wait until we see resistance within the marked zones. Actually, as a matter of fact, you can see the market has already touched almost just the lower part of the zone, and hence we expect that perhaps it will test the upper part as well. Let me know, guys, if you have any questions or doubts on this discussion so far. If not, just type in understood or clear. Yes, Faizan, gold will be the next chart to discuss, as always, coming after crude oil. I'll wait a few more moments. So I'll take a quick pause here. If you have any doubts or questions, just type in the comments. Live chat, I mean. And if not, just type in understood or clear before we move to the next chart of gold. All right. Thank you, Raghu, for the confirmation there, and Joe as well. What about the others? I can see a lot of people are there. Very low participation in chat compared to those who are live. It's a live webinar, guys. That's not the recommended behavior. But anyways, without wasting any time, let's now head over to our next chart and see what was discussed in the last discussion on gold. So here is the chart of gold as discussed in the last public webinar conducted on 19th of this month, and we are looking at a sideways range, I guess. Let's just move a little bit further and see if something more clear was discussed. What I'll rather do is just play this webinar with Forex speed and see. Yeah, I'm just answering a question from Raghu. So here's the analysis from the last webinar. We are looking for long consideration above 3695. It's a breakout long, nothing very fancy, I guess. And here's the other possibility, which is suggesting one leg down before upside movement. So these are the two possibilities: 3695 plus longs, and with below that sideways one leg down before up is possible. And here you have the live chart on screen. So the last discussion was somewhere over here. This was the range where I had drawn the box. Here's the level of 3695. The market has gone above it and has proceeded to make new highs. So this makes it a breakout long trade, which was discussed as such in the last webinar and has played out precisely. And as such, 3695, it has gone to 3778, giving us so far 80 plus points, 2.33% plus movement. Exceptionally good play out of the analysis, and this brings our tally so far to every discussion of euro, crude oil, gold has worked out from the last webinar that we have discussed so far. So that's it from the last discussion. Let's now look at what may be the case here. So as Raghu asked in the last webinar, is it possible to discuss higher time frame targets? And we already discussed the possibility that 4,000 level is plus. Immediately though, I would say 3870 plus levels is the most bullish level we can expect. And it is actually a what you would call a breakout long kind of market. We can just take a swing long on this and leave it. Stop loss technically should be lower than 3714. That's going to be a wide stop loss for this counter. Let me just very quickly enter my position on this. Just give me a moment, guys, and I'll get back with you in a bit once I've entered my positions. All right, so I'm back here and we have entered the long position on gold. And the idea is pretty simple. The stop loss is wide, 60 plus points, roughly 3717, let's say. And we are looking for continuation of the bullish movement. As such, we are looking at a wave 3 in play, which can take this market to as a, such 3870 plus levels. 3875 from the looks of what we can see on screen right now. And the idea is straightforward. We are looking at an impulse. Let me know if there is any doubt on this discussion, and if not, just type in understood or clear. Yes, I have been rather brief. I have not discussed things in detail, but then again, it's just a very simple analysis here. We are just looking at an impulsive count here. Nothing too fancy to discuss. It's a breakout long trade situation. We have entered before the break, and we'll possibly add more longs once we see if we see a pullback. And we can see straight out longs as well because it's a wave 3 and wave C. Threes are known to be super impulsive or super strong. So that's the reason for not being too cautious with the wide stop or being less cautious with the stop so that we allow the market to give a proper play. Thank you for the confirmation there, Raghu and Joe as well. Anyways, that's it for the play on gold. I'll just discuss a little bit of the HTF here as well. It was supposed to be a less than alert. So I've just loaded the data and I just wanted to discuss the higher time frame point of reference. For context, we are looking at an impulsive structure which started around the price level of 3268, date 31st July 2025. And we are then looking for an impulse which is currently in possibly the wave 5. We are looking at the 1 here and the 2 here. 3 and 4 are complete. And this is the 5th in play. So this resembles a proper impulsive structure roughly, which looks like this. Currently, we are in the 5th leg, and within the 5th leg, we are going to see a demonstration of the fractal nature of Elliott wave. So within this 5th wave, we will again have 5 legs. So this will be, let's say, a Roman 1, this will be a Roman 2, and we are then heading up for the 3 and 4 and 5. So it's pretty self-explanatory. I just wanted to give you guys a context of what's possibly happening here. And that's about it for the context. I don't see any questions anyways, so no further point in discussing the same thing over and over. We will now head over to the next chart of S&P 500. And obviously, let's just very quickly check what was being discussed on this chart in the last public webinar, which was conducted on the 19th of this month. So we were looking at two hypotheses. One was pointing straight up, one was pointing up for a shorter time frame, or what? What's going on? How is it? All right. So two analyses, both are suggesting. One is suggesting impulsive up movement. One is suggesting corrective up movement. So we had a confluence of analysis. The price was at the time of discussion around 6651. So let's just pause and see what really happened in the live market. 19th September is over here. And the market did go higher as expected or as was suggested in the count. This is again a +1. The market has gone up as per analysis. So far we have looked at the chart of euro. It went down as per analysis. Crude oil went sideways as per analysis. Gold went up as per analysis from last discussion. And SPX went up as per analysis from last discussion. So we have quite a winning streak so far. And now let's discuss the live chart. So right after the discussion on S&P, I was looking at the chart again, and the last live webinar discussion on S&P, I was looking at the chart and I caught the possibility of strong reversal I did post it in the private Slack group over here, as you can see, with a special word alert, which I have rarely used in so many years. And the idea was that we were looking at a possible diagonal. That was the main idea, which was creating resistance around this line, whatever this is. I think 6670 something. Anyway, so that was the idea which we discussed in the private Slack group. Of course, as I said so many times, not everything can be discussed publicly, and that's the reason I have my own group, etc. So, anyways, that was discussed, and after that, the market has gone and given a diagonal, and it has even respected the resistance level of 6670 and is currently sustaining below it. So, more or less, the idea did play out. The alert already warned our members that a possible reversal was in play, and we were able to save ourselves from any possibility of what do you call bigger stops on long positions, because as you can see the move has been fast here in the downward direction. So that was the case so far. The upside trade played out, or the analysis played out, I should say, and then we were able to capture the corrective structure as well, or the expected correction as well, and it has played out as well. Now what I am looking at is the possibility that this market may be heading further lower. And as mentioned, I have assumed, not assumed, I'm considering, let's just go on the early, that if this market really is moving as a diagonal structure, then it is possible for this market to go to 6500 or lower. So anywhere from 6500 to 6400 or maybe even lower, but we are not really interested in all that. At this point in time, we will just consider this as the support zone, which starts around 6500. And that just basically means this market can head something like this. Now, apart from marking the support region, let's just check the actual count from the last point of reference, which is coming around over here. All right. Anyways, that's this is the outlook. We are looking for downward movement, and again, there are two types of plays possible here. Conservative traders can wait for the market to go below 65.83 or lower for bearish possibilities, whereas this will be a little bit too high. We can also look for possibilities, aggressive shorting possibilities below 6608. So that's the play on S&P. We are in a wait and watch situation with a bearish bias, and the count suggesting more bearishness to follow. And as I've already mentioned, 6500 or lower levels are also possible. So there is that. And with that, I can say that we have discussed all the main possibilities. Let me know if you guys have any doubts or questions on this chart before we head over to the next chart of BTC. If not, then just type in understood, or is a request from Logan. Can take a look at the daily chart. I'm not really interested in looking at the daily at this point because I'm not sure which of these charts. I'm following multiple of S&Ps. Is the daily discussion. Let me just quickly have a look here first. Hmm. Is the outlook on the daily possible 3, 4, fifth, perhaps complete, which is what we have discussed. All right, so that's the quick take on the daily chart. Impulsive structure currently in the wave 5, which looks possibly complete here. And if it is complete, then as I said, 6500 is just the start. It could go much lower. Anyways, that's the outlook, which is kind of reinforcing the bearish idea. I will have to look at it in even more detail and see it or track it with more cautiousness. Anyways, thank you for the confirmation, Joe. You're welcome, Logan. Now let's look at the chart of BTC. And of course, here is the view from our last webinar, which was connected on 19th of this month. And let's see if I had made a clear discussion or count here. So here's the chart of BTC. We have drawn a support region and we were expecting that this impulsive structure will see a pullback within the support region before the takeoff or expected takeoff. And support is around 109 something. It's a big support actually. Let me see if there's something else we have discussed. Not really. So that is all for the discussion from last webinar. Let's now check out the live chart BTC. So it has right now gone actually lower than the lowest range of the support. So as such, it has worked out in the sense that the pullback has completed. So +1 again. So far, all the discussions we have discussed in the last webinar have worked out. But as such, I'm not very keen on looking for long possibilities because the correction has gone a little bit deeper than expected. So at this point, it is questionable that even if the count does seem to be working out, it is possible that this market is doing completely something else. So it's a wait and watch market while the analysis I have on screen is suggesting bullishness with this upside arrow, etc. And it is still technically possible. I am not keen on adding any longs on this market. So we'll wait and see if this alerts of 115464 or then 117488 are taken out on the upside. If they are, maybe then we'll be looking for long possibilities. If not, then we are just going to wait and watch here for now. 115464. So above these levels, this and this level, perhaps we will look for longs. Otherwise, as you can see, I have already placed an alert near the low here. And if it's taken out, the bullish counts are of course invalidated. To be precise, the low is 107234 on this chart. And of course, we are using this data feed. If you are using a different data feed, then the prices will vary a little bit, of course. So just be mindful of that and do not chase exact levels, but the analysis. I won't be taking any further time here because there isn't much to discuss. It's a completely wait and watch market, no action for now. And let's just discuss the last chart of NVIDIA, see what was being said, and then we will look at the current data and see how things have progressed. So this is the count. We are expecting bullish continuation. On 180 plus, we will look for long opportunities. So let me just discuss it on the chart, Raghu, first, and then I'll take your questions. So that was it, 180 plus. We are expecting that's the whole play on NVIDIA. Hmm. Let's load up the chart. Is the updated outlook on this counter, and it has already taken out the level of 180 to the upside. That is, it has triggered our counts and it is still stuck in the sideways range. That is to say, it has not played out the upside view as we were expecting this market to do, but it has not even invalidated our analysis either. So far, this market is performing as expected, and technically, it's working out so far well. The technical stop loss at this point should be somewhere around 115, but I think practically speaking, we can just place it around 165 and then wait and see how this market performs. So Nvidia, the what do you call play looks all right. And now let's take the question from Raghu, our private Slack group member. Is asked this breakout at 184 for Nvidia. So if at around 184, it's not really breaking out of 184, it's just testing it. Although I can see the price is around 184.25, it will still be considered 184. And since the market has not sustained above it, we cannot say that it's a breakout. So I wouldn't say that the question is correctly worded. But anyways, I do get your point, Raghu. And the idea is very simple. If the market, let's just remove everything. If the market sustains above this level, which is 184 something, and then goes above and then takes support on it, that's what you will call a breakout. So this part will be called the breakout. And the pullback part, this part is called the retest. And when the market has given the breakout and then it retests the last resistance, what was resistance before becomes support. So after the retest, the resistance will transform into a support. So that's the correct way to think about it, and that's the reason. All right. I guess too much of discussion on the educational side. Anyways, just avoid it for NVIDIA. That's the classical kind of play we want to look at. And of course, do be mindful of how the index is behaving. But NVIDIA is kind of in a strong bull rally of its own. So you may see it ignoring the moves of the index, possibly. Not necessarily, but possibly. But again, it's a wait and watch market. And yes, the upside view looks intact, and the view was 180 plus longs can be entered, and if they have been entered, the technical stop will remain at 168.93 to be precise on this chart with this data feed. Of course, I mean it's a stock, so data feed word is generally what I use for CFDs. So anyways, on this stock, the technical level of support is, or invalidation I should say, is 168.41. So just be mindful of that and the remaining things. Hopefully Raghu is clear on his discussion. If we are predicting S&P and support level, it can be extended. Okay, we have already answered that. Thanks for clarification. You're very welcome, Raghu. All right, guys. So with that being said, we are actually, that was the last chart we discussed in these webinars, NVIDIA. So we have now concluded the webinar. I didn't even get the time to make the request that kindly share the content, guys. What are you guys doing? This is 175th webinar, and our view count has not really increased as per expectation. As you can see, even the last webinar, the views have remained below even 300. This is so super subpar. So if you guys have access to some groups where this content will be appreciated, kindly do your part and do share it over there. That's an important request. Do not ignore it. And if you want to see these public webinars continued and perhaps discussion from even more charts, then do consider it seriously. With that being said, I would say we have discussed everything now. And we are now going to conclude the webinar. Have a good weekend, guys. I hope you enjoyed it till the end. Of course, to my regular viewers, Raghu, Joe, and those who joined in today, Logan, and Faizan, Manuel. Do not forget to consider the request of sharing the content. And those of you who are enjoying the content, you already know if you want more of these updates in private, that is more frequent updates, you can request the details for Slack group by using the link in the description. That's it, guys. I would say thank you for staying till the end, those who did. And thank you very much for the analysis. So, okay, Joe, very much nice to see you again in the webinar as always. You're very welcome. Influences Nirav. Have a nice evening. You too, Raghu, and have a nice weekend as well. Falcon, just check the recording. You too, Joe. All right, guys, let me just end this session and I'll see you guys in the next one. Take care and bye for now.